Hi everyone, today let's talk about 2025 and the hot market for IPOs and the potential ways to make the most of it, as well as potential factors for markets over the upcoming year. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So let's talk IPOs and markets for 2025 and how to potentially make the most of it. The outlook is looking more exciting for IPOs this year, and typically during IPO season, that is a good time to be an investor. When we're getting lots and lots of IPOs, that means markets are continuing higher, there's investors out there, there's capital to be had. And if IPOs are going to come back strong this next coming year, for me that says markets should be kind of rallying. We could see strong moves in markets, capital being invested into these markets. It means that investors are not too cautious. There's still some risk-taking potential in markets, which again should be bullish for markets, a little bit of hype. Remember when we saw big IPOs, tons of SPACs, the last time that was when the market was definitely getting really heated. We saw rallies, but that was a topping for markets, at least for the medium term. But looking at this here, you can see more than 300 companies expected to go public worldwide, a couple of fintechs in here in Europe, and we've seen some of these go pretty strong recently, 149% on IPO value in 2024. You can see some of these here, Tata Motors, Tata Passenger Electric Mobility, expected to float some of their shares out there. OpenAI, that could be interesting. Definitely going to be a ton of hype around that if they go public. And then Stripe, processing 1 trillion annually, similarly with Klarna, moving beyond buy now, pay later services. So some competitors out there for Affirm and things like that. Potential Starlink transforming the rural internet service. That could be interesting if they went public. Definitely would be a lot of hype around that. We haven't really seen that as a potential yet. They're currently just continuing to work privately, which honestly is probably better for their business model, but eventually I would guess that it'll go public. We'll see. A couple others in here. Plaid, definitely interesting. Another payment processing company, huge there. Toro, another kind of Airbnb for cars, car rental service where you can do peer-to-peer and some really nice cars, definitely a more high-end product there. Again, another potential indication of a strong economy out there. If you're going to be an IPO investor, definitely be cautious. You can see over a 5-year period, a lot of these lose a lot of money early, 37%, more than half of their value over 3 years. So be patient there. Once that has happened, you can definitely see some good returns. First day trading returned about 6% annually, so first day trading, good opportunity there. But like I said, be cautious in those early days, be quick and nimble, take your profits early. Over the medium term, it definitely gets a lot worse. Over the long term, definitely gets a lot worse, with most of them being negative. A couple of them positive, but most of them negative past that first day of trading. So definitely something to consider there. And part of that is because retail investors can't buy at the offer price. You get what's offered to the markets, which is going to be less sweet. You also have lockup periods for founders and employees. Some of those start to get sold out. And then you have to compete with all of the other things here. Tug of war between interest, venture capital, underwriters, early issues, as well as all of the cash trying to get in the IPO. So definitely a lot of factors. Like I said, early trading, generally good. Medium term to long term, not so great. But once they kind of bottom out, look for those consolidations and then potential upswings. Robinhood was one of those, which has had a really good year, which has been really strong recently, but since its IPO did not have a great move there. They're still saying to steer clear of SPACs, blank checks, those do not do as well. Investors saw 45% losses, 57 after 3 years, so not good there. Venture capital companies, definitely something to look for. Are they in the companies that you're looking at? Venture capital generally boosts first day pops, non-venture ones not so great. Other factors, look for those sales figures, 100 million sales annually, usually fare better on IPOs. If they have less, not so much. And then profitability, obviously important, kind of what we look for in most individual stocks. If they have profits, they generally do well. If not, something to steer clear of, at least for the short term. Looking at fear and greed, we finished the week at a 34, down from a 35. You can see the timeline. Big step down here from the 17th to the 18th, slow grinding price action, didn't quite recover nearly any of that move. And now we're starting to roll back down. We'll take a look at the price action, but for now it doesn't look super great. Indicators still in fear pretty much across the board. Again, typically as a contrarian metric, this could be a decent time to buy. We're definitely lower than we've been in the last calendar year, really on all of these metrics. Put call ratio pulling back, still in greed there, volatility starting to rise into the Friday session, and then safe haven demand sitting at neutral, junk bonds still sitting in fear, not telling us a whole lot on the bond market. Moving over to the AAII survey, you can see we've normalized here for the bulls at a 37.5 is the normal, 37.8 was the number. Neutral's a little bit squeezed, bears a little bit more. Again, still seeing this pretty substantial decline every single month, every single week here for the past couple of weeks. Bears sitting relatively flat with a slight step up. I still think this is going to continue in this direction a little bit more until we see a pretty negative number on the bulls. I think we're going to see negative markets over the medium term. Doesn't mean you can't see slight rallies. We talked about it on the Friday, but this is pretty substantial over the last month. Looking at seasonality, we are still typically in a bullish period heading into the last 2 days of December. You can see slight rallies. Small caps supposed to continue to outperform. They didn't really do so great on the Friday. They were doing okay early in the session while markets were falling, and then they ended up falling with the rest of markets, but typically seasonally bullish. We'll see if it plays out into those last 2 trading days. And then as we enter the January timeframe here, you can see really sideways choppy is the thesis when it comes to a typical year. They say post-election can be quite bullish. Little bit of swings in here. You can see up 1% early, back to negative mid 2 weeks from now. And then that is supposed to be the bottom where you start to see some really aggressive rallies into the end of the January timeframe. We'll see if that ends up playing out. You can see all of the post-elections relatively bullish, with the Dow being the lowest and the NASDAQ being the best, supposedly for the month. And then looking at the calendar, nothing here for the Monday. Tuesday, supposed to be a bearish day, down 18 of the last 27, something to consider there, fairly decent metric. And then looking at the January calendar, closed for the New Year's holiday, first trading day up 18 of the last 27, so decent up day there. For the Thursday, second day, a little bit better, 21 of the last 31. Santa Claus rally ends during that time period, a little bit of data, nothing crazy. And then bullish Tuesday for the 7th and bullish Friday for the 10th. Overall, relatively bullish with no bear heads here for January. Then looking at the calendar, Monday, Chicago PMI expected to be a pretty low number there at a 42. Tuesday, basically nothing. Wednesday, New Year's. And then for the Thursday, you have initial jobless claims, continuing jobless claims. We've been talking about that a little bit more. Global U.S. manufacturing PMI, fairly interesting. ISM manufacturing numbers. Fed balance sheet, Atlanta Fed GDP. And then for the Friday, ISM manufacturing and manufacturing prices. Overall, relatively low threat week on the economic data. Moving over to Max Pain for the end of the week. Next week, you can see 595 current stock price, 598 Max Pain, so relatively flat on the numbers. But look at how many calls there are here, 600 and 610, bigger than the put walls here, all the way down at 577. So this is a relatively bearish chart for me. Put call ratio also quite low at 1.17. Total options, not a lot, so not a huge impact on markets. At 381,000, I expect that to continue to kind of rise over the week, but for now, this looks a little bit bearish to me. Moving over to the charts, looking at the S&Ps here, you can see up slightly 0.67. You can see tested the trend here last week, tested it again, hit VWAP at the low, which was 59.03. The low of the week was 59.02. So we touched that level, caught a little bit of a bounce from VWAP. Momentum bearish, RSI still a little bit bearish. Obviously very low volume on the holiday week, so wouldn't say it's a huge metric, but this big wick rejection at the end of last week tested the low, rallied a little bit this week. Maybe we see some continuations into here, somewhere in the 6100, 690, somewhere in there makes sense to me. There's still definitely within this structure. I've been talking about a bearish change in structure, and I still think that that is a possibility, but after this week, you can see a little bit of bullishness probably next week. Makes sense to me. Is it going to hold those gains? Maybe not, but in the short term, it looks okay. And really, this is what I was talking about here on the hourly. So you have a high, lower high before we had the rejection. I was hoping to see the rejection cleanly at the 21 EMA, but it didn't quite work out that way. We ended up overthrowing it and then pulling back. Bearish day on the Friday. Closed right on the trend. Continues to be a very important level. Held the trend here on a closing basis. The momentum in the RSI still say quite bearish with the step down on the close. RSI breaking down from the SMA. But on a technical basis, this looks like a breakdown rally. Higher low setup here. Hold the trend. Look for the swing up to this in that 6100 right back to these highs. And then if you get a double top from there, that's going to be concerning. But if we push through to the trends up here, 6180, that would be a bullish higher high. And then you could expect this trend to kind of continue up and to the right. But those are the two scenarios I'm looking for. If this pulls back, starts to break through, your lower trend would be that 57.67, which would be your lower high setup. If we did pull back to the trend here, that would be a double bottom, and then you could potentially look for higher highs to come. Or don't forget the alternative. Markets can actually go sideways, which we haven't seen for a while. Maybe we continue to kind of sideways chop in here for a little bit in a more medium-term topping process before we see that change in structure. And then looking at the Tasty charts here, you can see continuing to be generally up and to the right. On the weekly chart, you can see that 8 EMA 593.87. We closed at 594.85. So we're back above the 8 EMA on a closing basis, which is relatively bullish. Again, want to see this continue up and to the right. We have the ATR trailing stops there still in bullish conditions down at 565. Second ATR band would be your target at 607, which pretty much takes you back to those all-time highs. So right now still looks a little bit up and to the right here on the weekly. And then looking at that daily chart here on the SPY, still bearish conditions, ATR trailing stop 607.94, which is pretty much the level that we just talked about as your potential price target. So mixed signals between the weekly and the daily charts. You can see big volume on the selling, big volume on the rally. We did see a little bit of volume coming through on the Friday session, which ended up right at the end of the session. We talked about it in the Friday video, which again to me says low, higher low potentially coming off of that 55 EMA on the daily chart. Touch that level, looking for a swing up to that 607 area. Might be a little bit aggressive. We'll see if it ends up following through on that, but short term, I do think we could see an upswing. Moving over to the NASDAQ here on the weekly, again, 0.86 to the upside. Momentum continues to step down. RSI, you can see retest of the SMA, got a little bit of a bounce off of that. So as long as this holds, we're in good shape. Weekly chart still showing a little bit of bullishness. And then I did do a little bit of reanalysis of this daily chart. You can see fairly clean, still looks a bit like a rising wedge here as we continue to narrow in this structure. Touch the level here, overthrew it into the Friday, rallied up into those 3 days of bullishness, and then we pulled back here, gapping to this trend, touching the lower trend, and then we ended up catching a little bit of a bounce from there. Really no change versus the SPY charts on the momentum and RSI. You can see momentum stepping down, RSI continuing to step down there. Interesting to see that. If we hold this trend, hopefully we get a push back to here, eclipsing yesterday's push and then getting a new relative high and then looking for the trend up here around that 2198 area. But it is possible that we see this high, lower high setup, and this is just a kind of temporary bounce. And then we get a breakdown of this structure here. If that happens, then your 55 EMA is your next level around that 20,873 area, which would be about 2.5 to 2 3/4 lower from here. So a couple of things to play out. Wait to see what kind of price action you're seeing with those breakdowns or breaks up. If you saw the Friday video, you'd know I'm a little bit bullish here into the short term. Monday, Tuesday, want to see a little bit of rally through that Santa Claus time frame. I think it's possible. I think markets are kind of set up for that with this low, higher low here, or potentially we just kind of wedge sideways for the next couple days, which gives you the opportunity to sell options, which is what I'm doing right now. And then looking at the actual Qs chart here just for a moment, you can see we have this upward structure here, the one we just talked about, but we have this potential bearish structure, and you actually have two touches on both sides now with this high, lower high, and this low, lower low here. If this breaks down to that lower low, that would take you down to the 507 area and that 55 EMA almost perfectly. So a couple of things to watch for. Right now, it held the 21. Looks like sideways choppy to slightly bullish. If this structure breaks out from here around that 527 area, then we're probably going to continue up and to the right, at least for the near term. Moving over to the Tasty charts here, you can see that up week still holding above that 8 EMA, so generally bullish conditions. You can see sideways choppy to slightly bullish through this period. Looks very similar to the price action we're seeing now. A couple of pullbacks in there, couple of touches, but generally grinding slowly up and to the right, which seems to be the case for now. We didn't actually quite touch that 8 EMA, which was all the way down at 514.87. The low of the week was 516.13, so didn't quite touch it. Momentum back to bullish on that weekly chart. ATR trailing stop in here as well at 477, so still looking a little bullish on the weekly. But again, looking at the daily, you can see bearish conditions. ATR trailing stops up here around 544, way up there, just above this previous high. Makes sense technically. A little bit of volume coming through on that Friday, which was buying pressure. You can see I did enter to the bull side on that move. Momentum not great yet, but still looks okay. Your current support is that 34 EMA there at 516.53. Again, didn't quite touch it on that Friday session. Definitely touched it here early. On the 20th, rallied from there. So held it on a closing basis. Looking for the higher low setup, continuation back to these highs around 537, 538. Certainly a possibility, but still watching this as a high, lower high with that bearish condition on the daily. So mixed conditions, probably sideways choppy at least for now. Moving over to the Russell here on the weekly, very slightly positive there, 0.21, held the level, 221.49, momentum still bearish, RSI still bearish. We round trip this move in this consolidation. We're below 21, VWAP, and the 9 EMAs. 3 really strong bear weeks. Holding the level here, waiting to see what happens. Are we going to get a little bit more push to 226, maybe 229, retest some of these trends and then push? Right now, you have this kind of double bottom price action at that 218.13 level off of 2 weeks ago, and then looking for the rally continuation if it's going to happen. Generally, price action is up and to the right with these highs and higher highs. You haven't really seen the rally off of this yet. Are we going to come into here, 236, 237, retest these trends, lower high setup, and then continuation lower? If that happens, that's going to be a true change in structure for the medium terms. Right now, it does look like a bit of a double bottom with a little bit of rally into the Friday. And you can see that here on the daily chart. Touch this, rallied up, hit the 9. Higher low setup, holding this consolidation right off of this zone here. Highly traded zone, still holding that touch. RSI doesn't look super great with the breakdown, retest, breakdown. As long as this continues to hold in here, hold that 144, I still like this for a potential hold and continuation up. At least for the short-term rally, maybe dead cat bounce style move into that 21 EMA, 232.50 trend lines in here as well. 229.58 is your 55. So want to see it hold, rally into here, then we'll see what happens from there. Moving over to the Tasty charts here, you can see pushing into this zone on the weekly chart, still bullish conditions, trailing stop all the way down at 206.40. Big volume coming through 2 weeks ago, held the level on the doji candle. Not a lot of volume, but again, want to see a little bit of a retracement here to the 8 EMA, 228.60. Weekly chart looks okay. You have definitely some retracement. You can see the 8 trending lower a little bit. Seen that a few times, ended up going higher from there, but doesn't look as strong. Again, you can see touch the ATR band here at the highest level, pulled back, didn't quite get there, and then we saw the pullback. Not a great indicator for the medium term. And then looking at that daily chart, you can see we are right at those lowest ATR bands, which is potentially why we're seeing a little bit of consolidation. Your 144 still support here on the daily. Want to see that hold. 220.22 is that level. If this continues lower, that's going to be bad. Obviously, still bearish conditions here. This trailing stop is much lower, down at 237.50. So a little bit of a tighter stop, waiting to see if it rallies into here or not, or if it just kind of continues lower after this sideways consolidation. Still cannot quite get above that 8 EMA on the daily chart. Want to see it get above there. You can see we tested it back on the 26th. Tested it again on the 27th, ended up closing bearish. Moving over to the Dow, we finally got a positive week after 3 weeks of bearishness in a row, just 1/3%, held that 426.20 level. We tested it 2 weeks ago, tested it this week, continues to be a zone of support. So that's the level we're trading off of for now, and you can see we rallied up. 432.78 was the level. Touched that level, rejected from there slightly. Momentum still bearish, RSI still bearish. Again, not a ton of volume, so take it with a grain of salt for the short term. And then looking at that daily chart here, this just does not look super great, similar to the Russell. Tons and tons of selling, had a bit of a bottom, dead cat bounce rally here. 55 EMA was resistance, touched that level 2 days in a row and then broke down from there. Momentum still holding up okay. If we get the continuation lower Monday, Tuesday, this momentum will probably continue back to the downside, and then realistically we're probably headed to 418.38 once we see that 426.20 level break, and then you have a little bit of a consolidation base here, 416.35. Depends on how you want to do the level. I did it off of this kind of consolidation here, but if you want to put it down here, I think that makes sense as well. Either way, current level 426, next one 418. Moving over to the ratios, looking at the SPY Russell, NASDAQ SPY, you can see SPY Russell did continue to outperform like we thought that it would. 266 did end up being resistance here on a closing basis though. Momentum bullish, RSI still bullish. Looking for the SPY to continue to outperform at least a little bit, especially if we get the breakout push to that next level. And then NASDAQ SPY slightly positive, so the NASDAQ did outperform just a little bit. Inside candle, nothing crazy. We had the big wick rejection the previous week, sideways choppy, so no change to the thesis. Still looks like a temporary top, especially with this high, lower high here now, waiting to see if we get the continuation lower here. Momentum hasn't changed yet. RSI still a little bit bullish. Moving over to the SPY divided by the M2 money supply, one of my favorite charts here. You can see we did continue to chop in the same trading range, 27.25 up to 28.50. We've been here for a couple of weeks now. We got back here on 7 October, sideways choppy, did test the level a little bit, did rally back up, has not gotten quite to the upside of that range. In terms of trends, it looks like a breakdown retest. We'll see if this ends up continuing lower here. If we see a break below that 21 EMA, that's going to give us a potential for 7 to 7.5% lower. Momentum bearish, RSI bearish. You can see that the momentum is definitely starting to fade. These aggressive rallies are starting to be shorter and shorter lived. Had a really strong one here. Pullback continuation here, not as strong, not hitting these upper trends, starting to fade off. Still looks like a bit of a topping pattern at that clean resistance, 28.50. And ultimately, if this structure changes, I think we're going to see a pullback to those more medium-term charts, which would pull this about 20 to 22% lower in here. We've seen this many times, rallied up, got extended, pulled back, rallied up, extended, pulled back. This was a deeper cut here. Obviously, this was COVID back here. That was a unique time for sure, but since these lows here, we've had really aggressive rallies over the last couple years, and it would not shock me to see this pull back into this 22% lower area over the next couple days. You can see, even if this was really aggressive, that could take the next 3/4 of a year or so, in my opinion. Moving over to the Mag 7, very slightly positive 1%. Once it gapped higher, we ended up chopping sideways. Very small candle there for the body. Momentum, sideways choppy, very slightly bearish there. RSI still holding up. Again, looks like a topping pattern, 3 candles in the same trading range. Breakdown retest of the trend potentially. And if this pulls back to that 8 EMA, that's going to give us about 5.5% lower. Looking at it on the daily chart, you can see a definitely cleaner high, lower high potentially, holding the 21 EMA right now. So as long as that holds, we're in good shape. Support is 321.40. Momentum still bearish, RSI still bearish, but we've seen that kind of before here. You can see high, lower high, consolidation below the SMA in here. Ended up rallying out of that. This does look a little bit worse. You can see the difference is high, pullback, chopped underneath the SMA. This looks more like a breakdown. Didn't even retest here and then broke down to a lower low. So doesn't look super great, a little bit worse on the consolidation. But for now, 21 EMA, that's going to be your critical pivot point. We touched it Friday. It ended up holding. If it does not hold on the Monday, Tuesday, then I think this is going to be a more significant change, potentially heading back into that 300 area. Moving over to Apple and Microsoft. Apple positive on the week, 0.43, continues to be an absolute monster. We've been rallying since 4 November, and we continue to do so. We did see a little bit of wick rejection into that Friday. The candle was only 0.43. The high of the candle was all the way up at 260.10. And then looking at that new level, 260.10 is your all-time high. We're in this range here. We'll see if we touch it again, break down or not, or if we push up to the trend here, 273 potentially. Continues to look bullish. I would be patient, but you do have a little bit of a wick rejection there, a little bit of hesitation at that new level. And then looking at Microsoft, down 1.39% on the week. Pretty much in line with markets for that Friday session. 429.88 is the level. You can see this kind of sideways consolidation. We've looked at this before. We were looking for kind of a downward trend structure here. Let's go ahead and take that off. It didn't quite play out. I still think this trend here is relevant. We'll see if we come back and test that. Let's go ahead and extend it out a little bit. Somewhere in there. If it continues to break down, we could see this swing back into that 392 area. 394 is the level, 388 is the next one. I've been talking about this zone for a long time, and I think that's definitely a zone where it could get to. You have this consolidation of EMAs. It's been a medium-term consolidation. We've been talking about it for a while. Still looks like distribution, looks like a lower high here, trying to break out of that. So far, it hasn't done it. We're back into the highs of that range. Momentum fading, RSI right at the SMA, waiting to see if it breaks down from there. Microsoft, definitely a more interesting chart. And if Microsoft changes structure here, which it is very close to doing, that's going to be significant for markets, in my opinion. Moving over to NVIDIA and Tesla, 2.5% up on Tesla, 1.71 here on NVIDIA. Momentum bearish on both of these. RSI is bearish on both of these because you have super extension on Tesla. Again, it's been a massive run here. Big wick rejection previous week. Doji candle this week continues to look like a bit of a top there. Threw some wicks to the upside, could not get those to close at a new high. So your current weekly high is from the 9 December week. And then looking at NVIDIA, we talked about this consolidation, downtrending action here. Continues to be the structure, test that upper trend, sold off from there. If this sells off to your trend support, that's going to be around 125, my level 124.69. And then you got the highly traded zone in there. So NVIDIA looks okay, but currently downtrending in the short term. Kind of looks bear flaggy, but it is a pretty wide ranging channel. Moving over to Amazon and Alphabet here, you can see Amazon kind of sideways choppy, kind of wedging in here, lower high setups on both of these. We talked about it in the Friday on the daily charts. Lower high setups, doji candles, continuing to look like a potential topping pattern after these really strong extensions. Could just be pullback in time because we did have such aggressive rallies. We did have overbought conditions there on Amazon. You can see we've rallied really from 153 back to 233, big move there. And then looking at Alphabet, momentum still bullish, RSI not quite overbought, but hitting these key trends that we've been talking about for a long time. Touched those 2 weeks ago, didn't quite touch them this week, continues to be your zone of resistance. Still think the risk is to the downside, and don't forget that looming DOJ potential. I think markets are saying Trump is probably going to squash that, but for now, looks like topping pattern at that 193.31 area. If that breaks down, 185.22 is the next one. Moving over to Meta and Broadcom. Meta up 2.5%, Broadcom up nearly 10%. Broadcom big move here. New all-time highs on the closing basis. Not quite an all-time high on the wicks, but did bounce from this trend here, pushing back to this trend here. Meta testing the level 602.95, rejecting from there slightly. Momentum bearish, definitely sideways choppy, no clean moves here. The trend, medium term, still bullish, still well above all the EMAs, still showing some bullishness there. And then same here with Broadcom, obviously, continues to look very good off of earnings. Definitely extended, though. I would be patient at this trend structure. For next week, that's going to give you a high of 251.65 or so. Moving over to staples and discretionary. Staples down 0.8, discretionaries just barely positive 0.36. Didn't look the same on the daily charts, but on a closing basis here for the weekly, still showing a little bit of risk on. Momentum fading on both of these, swinging to the bear side. RSIs are different though. You can see RSI on staples definitely trending down. Breakdown, retest, breakdown. We're waiting to see if this zone in here holds at 78.88. It did hold this week. Want to see that continue to hold and see a little bit of an upswing there. And then looking at discretionaries, retested the trend, sold off from there, momentum stepping down. RSI still above the SMA, but still in extremely overbought conditions. We got all the way up to an 80, currently sitting at a 72. Moving over to wood and oil here, you can see wood did catch a little bit of a bounce, 0.72. Momentum still not great, RSI still not great, but we found a bounce on this trend here. Structure still not great. Looks like sideways consolidation, but you do have some lower lows there. Want to see this catch some bounce, see some potential for the economic conditions to recover slightly. Current trend resistance in here around 77. And then looking at oil, this has been consolidating for a while now. So you've got here back in September, still here December, waiting to see the rally up to 73 or not. I still like this as a potential setup. I was watching it here and then we got really choppy, so I didn't do anything with it. But back above the trend, want to see it get above the 21 on a closing basis. Momentum bullish, RSI bullish. I still like this as a potential swing and push up into that 75 area, which would be a nice little move for oil. Moving over to Breadth, 20 and 50-day Breadth ended up bullish on the week, just barely. You can see 26% on 20-day, but the 50-day 0.5%. Momentum still bearish here, RSI still bearish, nothing crazy. Looks like a little bit of a dead cat bounce. We got really low on the 20 into the single-digit numbers there between 7 and 8. That is just about as low as it goes. It can go a little bit lower, but not very common. You can see it here in the 1s and 2s, in here 4s and 5s, but realistically in here 7s and 8s is as low as it goes on a more normal basis. So contrarian metric says this is an interesting time to buy. We'll see if it continues there. And then looking at that 50-day, you can see basically unchanged, test the previous low just barely, and then continuing to unchanged on the week. Right at that 26 level. Again, pretty low metric. Doesn't get here very often. Got pretty close in April. Before that was September of 23, and then you can see May of 23. So not super common. Once every couple of months do we get there, and typically it's a good buying opportunity. Occasionally you see it go lower to the 15s like March of 23, but again, buying opportunity. Markets ended up going pretty significantly higher from there. If this ends up being an opportunity, now would be a decent time to get into it. And just following up on the daily chart, because I didn't touch it on the Friday video, you can see that Friday ended up being negative, but so far it does look like a little bit of a higher low. Momentum didn't quite go with it. RSIs Looks like a breakdown retest. Want to see this kind of flatten out, higher low setup, continuation higher potentially. Similarly here on 20-day, breakdown, retest, broke through. Want to see it hold the higher low, retest of the SMA, continuation higher if it's going to do it. That's the setup right now. Looks okay. Waiting to see if some of these levels on that RSI hold. Moving over to 200-day breadth. 200-day breadth ended up positive as well, 2.69%, bouncing off of that 54.69 level. We touched it 2 weeks ago, touched it again this week. Momentum not going with it yet, RSI not going with it yet. Very different structure here, big extension, waiting for the retest here. Once we test it, I would guess we're going to see that sell, but this does give you the opportunity for that short-term rally that we've been talking about. Low, pull back, hit the SMA, you have some rally in there for a couple of days, and then you get a bit of a sell from there. This is the weekly chart, so maybe it lasts a little bit longer. It's definitely extended to a zone of support. You're kind of at the low of this trading range here. Got back into the trading range on a closing basis. So if this rallies, you could see some pushes into the 66 area over a couple of weeks. That would give you an opportunity in my opinion. And then looking at it here on the daily chart, this looks really nice actually. Breakdown, push back into the zone, retest the zone, touch it, ended up bouncing from there. Want to see it rally into that 64 to 66 area with the trend there. So right now looks okay. Medium term, again, like I've said many times, looks like a low, lower low, looking for a high, lower high. Could maybe retest some of these zones in here a little higher, 67, 68 makes sense. But for now, looks like a breakdown, retest, hold of support, looking for a continuation higher short term. Moving over to bonds, you got bonds up slightly on yields for the week. 2-year up 0.25%. The biggest concern, though, is 10-year. Look at this 10-year move here on the week. Really a lot of that happening on the Friday session. Closed above 4.5 at 4.62. We're almost back to the highs from mid-April. That was a pretty decent bottom for markets, but the 10-year continues to look really, really strong. If this pushes to 5 or potentially higher than 5, that's going to be very concerning. We're starting to get that re-steepening of the yield curve, which is part of the definite weakness in markets over the last week to 2 weeks. And that re-steepening phase can absolutely be catastrophic for markets. So we'll see if this continues higher here. The most recent high is that 5% range. If it gets through there, I think that's going to be catastrophic. And even really, if we get to it, I think that's going to be pretty detrimental for markets. So 10-year starting to drive prices. Want to continue to monitor that. I would like to see it break down from here. But for right now, this looks like a clean breakout. Close above the level. I would expect a little bit more continuation there. Moving over to the dollar. Dollar not showing too much strength, only up 0.18. Looking at that 108.04 level. Technically, we closed above it by just 2 thousandths. So you did technically close above it. Interesting. I would call that a touch. Maybe my level's off a little bit. I think I'm using the wick high here from this week back on 21 November, the high. Maybe it's off by just a little bit. I would call it a close right at the level. Want to see it close substantially above it. Right now, the trends are acting as resistance. Again, still want to see this dollar reject from here. The structure is still very bullish, still very extended, but if the dollar sells off, that could give equities a little bit of room. Right now, it's not doing it, and we did end up pushing to a higher high, but still respecting these trends as resistance. Moving over to bonds. Bonds continue to be basically flat. TLT selling a little bit, 1.37%. Still touching trend support in here. Momentum bearish. RSI still a little bit bearish, but holding this level. As long as that looks okay, that's decent. A little bit of risk on there this week. Want to see it hold there, at least sideways choppy from here. Doesn't look like it will based on these indicators, but for now, price says it's holding. And then looking at TLT, this is a bit of a dumpster fire here. We did close below this low from April. Again, medium-term buying opportunity. In my opinion, I still think this is going to be a decent time to buy. But like I said, on the 10-year, we did have that breakout on yield. So this might go a little bit lower. 85.90 is a level. And then you can see the lows for this most recent bottom in October of 23 is all the way down at 82.60. With this break here, technically you would expect a bigger break, but structure-wise, this definitely is quite bearish. And then just trying to give this a little bit of structure, you could see a point where you go from the low of 5 August week and then touching these lows here and then potentially touching it again. Doesn't mean that it's going to hold, but we're kind of in that region, technically a little bit below it. You could obviously adjust this as kind of a hasty trend line, but potential, interesting level, 85.90. I would be patient at least to there. Doesn't mean I'm not taking small nibbles for the medium term. I definitely am. I think this is an interesting area, but TLT looking a little bit bearish after 3 pretty solid down weeks. You can see it's losing momentum. The first down week was about 4.5%, this one 2%, and now 1.37%, about half each time. Maybe we get a little bit of consolidation here. Moving over to the VIX. VIX was down 13%. Interesting. Touched these levels, rejected from there, held this trend in here. We talked about it a few times. Momentum didn't go with it. RSI broke down just barely. So maybe this continues a little bit lower next week, back into the 1477 area on a closing basis. But for now, did throw a wick almost to the 20 level, pulled back, touched the trend. Higher low setup does look a little bit bullish there. For the weekly basis, doesn't mean we can't go lower in just a couple of days, touch the level again, and then continue higher from there. So for now, I would expect the VIX to go higher medium term. Moving over to my accounts, you can see I was down just a little bit on the week, about 0.4%. Nothing crazy, sideways choppy for my accounts. I didn't want to take those upswings because I thought we were going to see a bigger down move, which we ended up getting on the Friday, but I did enter at the end of the Friday session because of that upswing we saw, which was pretty aggressive, good volume there heading into the Monday, Tuesday. We'll see if that continues. I do think that it will. You can see my positions here, covered call on the IWM, covered call here on the Qs. Pretty bullish on those. You can see 524 for the call, 522.50 for the price, looking for a little bit more upside, giving myself some room for some profits there. If markets get the continuation, they ended up basically flat after hours. Not super great. Would have wanted to see them rally a little bit more after hours, but overall good. And then IWM, same here. Basically flat in the after hours, still holding this position, 223, giving myself about 70 cents room there and then 84 cents on the call, trying to collect credit. So want to see this continue the rally next week. I am trying to play this short term. If we start to see some breakdowns Monday, Tuesday, that's obviously going to push me out of these positions. But for now, want to see those upswings, and I think we're going to, at least for the Monday, Tuesday. We'll see what happens after the new year. Let me know down in the comment section what you think of the IPO market for the next year. Where do you think the stocks will be going? Are you a buyer of IPOs or are you a short-term trader? And what do you think that means for the broader economy and sentiment over the medium term? Is that an opportunity? Do you think markets are going to go higher into that IPO market? And does that indicate a top to you? Definitely some things to consider. Otherwise, if you got any value out of this video, make sure you like and subscribe and hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.